Hey guys, welcome to today's edition of London Session Review. Today is February 12th, 2016, and my name is Alejandro Zambrano. Gonna give you guys a quick update. But before we start, I need to stress that trading financial markets is risky and that unfortunately there's always risk of lose all of our invested money. Okay, starting out with the euro versus the US dollar, and we got some better retail sales than expected from the US. That points to, slightly stronger economy than anticipated. So this is good, you know. Some people give it a likelihood of 15% that we'll get a recession this year. And with this data, they're more confident that, we're not heading towards that. But for how does that imply trading? Well, because the sentiment overall is really bearish in regards to the Euro USD and the US economy and the likelihood of getting higher interest rates, people are not buying the dollar in a big way today, which makes sense. The overall trend as well here in the euro dollar in this 30-minute is actually bullish. So even though I said this morning, it could be a good idea to buy here because the data was actually better than expected. Uh, I wouldn't be a buyer here. I mean, at least not right now. Maybe wait for Monday or so, and then potentially this heading up higher, I would say. But it's always good to take a step back when the data doesn't match when the data in this case doesn't match the trend, right? Because the overall trend is bullish, so we should look to buy. Um, So with that in mind, I would like to wait. But anyone, that think that this report doesn't have a big impact or, you know, want to look at the big picture, they're probably buying at these levels and looking for this to head up to 114. As well, FXC MSSI index shows that most people are actually betting against this. So if you want to trade against the crowd, which is usually or what's well, that's actually what is recommended by the SSI, then we should be long here. Looking at other markets, this is the dollar yen. Dollar yen is barely moved today. I think that makes perfect sense. Price needs to digest its losses. The dollar yen is down with about 1,000 pips or so from its high up here, and I think the market is not in a position here to sell this right now. I think maybe starting from next week or so, we get more of a corrective move, maybe up to 114, 115 or so. And then from these levels, we might look to go short again on the idea that stock markets return to their bearish trend at that point. So expect this to slowly edge higher. I'm not going to trade that side though. That will be the bullish side here. I'm just gonna wait for this to move up, and then if possible, I'm gonna short from a higher level. The level to short right now is this level, 111.55. Looking at the Australian dollar versus the US dollar, I'm still sticking to the general idea that, this big picture downtrend, which you're seeing here, is going to remain in place. And this is an uptrend, September all the way to December, and it failed here. And then we have a decline. And then here's another uptrend from 21st of January all the way up here, and then it failed here. So my idea is that the same way as we got a break here and a move to the downside, I'm looking for the same thing here. So again, I'm bearish below 71.55 as mentioned this morning, and here, it could be interesting to expect this move down, especially on today's data. I'm looking for this to reach 68.30 or so in the next 2 weeks. Looking at the pound versus the US dollar, the FXC MSSI index tells us that people are net long, so we want to be short if possible. The market is, consolidating here. I don't have a strong view, but right below 43.50, which is as low here, will most likely open up for a decline to the downside. It's going to be a resumption of the downtrend. At that point, looking for 41.80. This is the FTSE. FTSE moved out quite a bit today, and I think that's natural, again, given the strong declines. I was trying to warn in the articles I published this morning that, most likely we're gonna get some profit taking. Um, the technical trend is bearish below 57.17, but today's data was good. It wouldn't surprise me if we trade a little bit sideways, maybe Monday, and then next week break higher. Um, it's too early, but I know from a purely swing trading perspective that we declined quite a bit, as you can see here. I think it was about 8.5% or so. And it would be fair to expect a few days of consolidation, potentially maybe a move to the upside. And then the same way as a break happened here and here, that will be the time to look to sell again. So I suspect that we are now in a position where this has started to correct higher. Um, Looking at the German DAX, the situation is quite similar. The technical trend is bearish below 91.29. It is fine to short at 9,000 or so, as I mentioned this morning, with stop loss on the other side. Things haven't necessarily improved too much, even though we got that report out, and that will be retail sales. So what? I mean, that was a good number, but and again, we can short here at same as we can short the FTSE. It is bearish below this level. But the question is again, do we really want to short heavily now after such a big move? Usually, you see the market's going to give you maybe 1 week of decline or 2 weeks of decline, and then it switches. So then it's 1 week bullish, and then a 2 week bearish or so. And again, I suspect that we are heading towards maybe a week or 2 weeks of bullish price action, and then from higher levels, maybe look to sell off. This is the S&P, and S&P is as well in a position to be shorted. We've been bearish here for a few days, and I'm bearish below 18,982. Not like a big change really in the outlook at all. This is crude oil. Oh, this is interesting. I just noticed this. So it's edging higher, and probably on those retail sales numbers being better than expected. So this is clearly a big strong candle. So the idea today was, which is the same idea as yesterday, to be bullish above, bearish below 29.20. But we can see here, this is a strong candle, which is going to close in about 15 minutes time. So you see such a big candle, it's not the best thing to go short. So it might break this level, or it looks like it will break this level, it's too early to know at this point, and then might move up slightly higher. And I would guess that with that in mind, maybe what it needs to do is it needs to do something like this, and then potentially trade lower, but from higher levels. But for now, again, the bearish scenario I just shared with you this morning, I wouldn't trade on the back of that, giving this strong candle, because clearly no one is interested to sell right now. They sold a little bit here, and if one traded on the back of that or here, I mentioned yesterday, then there's not too much to do. Stop loss goes on the other side. If it works out, you know, everything is good. If we get stopped out, we'll get stopped out, and it's no big deal with that either, really. And that's it. Looking at Brent crude oil is moving up to the sell zone as well. Here, I guess it's a little bit more balanced because it's not as oversold. Am I gonna go short here right now at 33, at 32.23? No, um, especially not because I think U.S. oil might trade slightly higher. But I'm just an analyst and a trader. I'm not in control of the market, so who knows? Maybe I'm wrong and it actually does turn bearish. Not that that's my base case. Just because I think stock markets can go up a little bit more, I think also UK oil and everything that's been sold off lately is probably gonna move up a little bit more. So for now, let's abandon the view to be bearish here, unless you're really committed and think this is gonna go down, and let's just track this little uptrend, and then eventually, maybe in a day or so, we can sell it at a higher level. Looking at gold and silver, we start out with silver. The idea was to buy a dip here. We didn't have the opportunity to reach that level. A break above 116 can take you up to 116. Oh, sorry, to 1623. We did bounce from the lowest fib here um, because we didn't reach the levels we wanted to reach. We have no trade on here. Looking at the price of oil, gold, it's a very, very similar situation, but it's narrow, trading sideways between 1232 and 1246. A break to the upside here can take you up to 1263. And that's it, really. That's what I wanted to share with you guys. I hope you have a good weekend, and I hope to see you guys early on Monday next week. Don't necessarily think we're gonna have something extremely interesting to trade on Monday morning, but most likely we're gonna have something on maybe Wednesday or Tuesday, also Tuesday or Wednesday, as things develop. And if I'm right in my view that say dollar yen is gonna go up higher, stock markets are gonna go higher, and everything's being sold off is gonna go higher, then it's gonna be a little bit problematic to trade because it's a corrective move, and on corrective moves, they're difficult to trade. It's not as easy as this week because in this week we had moves in line with the trend. As an example, this is the Canadian dollar yen. You know, goes up a lot, goes down a lot, choppy choppy, then goes up, and then the downside was quite straightforward, really. Sell here or here, then sell here, and then profit here, and that's it. Guys, have a good weekend. Speak with you guys next week. Thank you. Goodbye.